Welcome very much to this third in the series of the IMF seminars on issues in value-added tax. Thank you so much for joining us again today. My name is Michael Keane and I'm in the front office, Deputy Director in the Fiscal Affairs Department in the IMF. So I have the honor of moderating the session today. As you may remember, the previous two sessions touched in turn on a kind of general overview of experiences with the VAT, where we touched on a number of issues. And then last session focused more on some specific issues related to the COVID-19 pandemic. Today we turn to, you'll see in the heading, equity, efficiency, administration issues. So we're really now, I think, turning to some of the kind of perennially most controversial topics related to the VAT. Its use in relation or its impact in terms of equity objectives, whether it's a particularly efficient form of taxation, what it's good at doing, what the VAT is good at doing, what it's not so good at doing. And so we really have quite a lot to get through today. And as I say, touching on, I think, some of the most contentious issues. So I'm pretty sure we're going to have a lively discussion today. The format will be much the same as the previous webinars. So we'll begin with an overview presentation, raising a number of the issues. Then we have four very distinguished panelists who can give us different perspectives on some of these issues. And then in the final hour or so, we'll turn to a general question and answer session. So let's make a start, and let's begin with the overview presentation, which is going to be given by my colleague, Ruud, who's also like me, in the front office of the Fiscal Affairs Department. He's until recently head of the Tax Policy Division and has come across a lot of these issues in much of the capacity development and analytical work we do at the fund, and he's done over the years. So I think Ruud will talk for 15-20 minutes, and then we'll turn to the panelists. So Ruud, perhaps over to you.
Good morning or good afternoon to everyone. So the title of the presentation and also of the webinar today is Equity, Efficiency and Administration of the VAT, which is basically like everything of the VAT. So covering that in, let's say, 15 minutes is impossible. So my focus will very much be on the policy aspects of the VAT, as we also have another webinar upcoming in March, which will deal specifically with the administration issues. But of course, there are important aspects of policy that matter for administration that I will touch upon. And my focus will be very much on the design of exemptions in the VAT and the rate structure, in particular the various reduced rates and zero rating that is often applied in VAT systems. So let me see if this works. Yeah. Broadly speaking, we may distinguish sort of various VAT models across the world. And this, of course, does not do justice to all the various differences within these models, but it does give us a picture of sort of the types of VAT models that have been adopted. So there's the traditional VAT, there's the so-called modern VAT, and there's something that lies somewhere in between them. And the traditional VAT is basically the VAT models that were introduced in the late 1960s, 1970s in the European Union that are characterized by a relatively high standard VAT rate, but then supplemented by multiple reduced rates, including zero rating for domestic supplies, and also multiple exemptions in the VAT, which narrow the base. Now, these models have over time evolved, of course, because there have been all types of developments in the economies, privatization of public utilities, the growing importance of services, recently digitalization. So VAT systems have evolved, but the more modern VAT systems have already taken some of these developments into account. And what you see is that the modern VAT systems, which are on the picture reflected in yellow, they are typically having a broader tax base, so fewer exemptions. they typically have a single VAT rate that is typically lower also than the standard rate in the traditional VAT models. Then there's also VAT systems that have been introduced more recently, starting off with more the model or modern VAT, but have introduced all types of exemptions to deal with the implementation challenges of the VAT. Now, why do countries employ these exemptions and reduced VAT rates? So why countries have them? So that will be sort of the focus of my presentation. I'm going to show you 4 slides dealing with that. But then I'm also going to discuss the revenue implications of exemptions and reduced rates, why reform is needed, and why reform is so hard. This picture here is just to illustrate something of the traditional VAT model related to the number of rates countries employ, and also the gap between the standard rate and the lowest reduced rate that are used. Now, when it comes to the question, why do countries have exemptions and reduced rates? I'm going to discuss it along the lines of 3 sort of groups of arguments. One is related to equity, the second is related to efficiency, and the third is related to administration. So the 3 topics also in the title of today's webinar. And so to start with equity, which is a big topic. So it's hard to do justice to this topic in just a presentation of 1 slide in 3 to 4 minutes. But I'm trying to give a brief overview of the bottom line. And the bottom line is that probably if you have access to other instruments, it's not a good idea to employ the VAT to pursue these objectives. And my starting point is here, basically the public finance textbook, the conceptual thinking about the use of the VAT and its function in our tax system. And the conclusion of this is basically, well, there's no clear role for the VAT to pursue equity objectives if you have access to other instruments that are better able to do that, like a personalized income tax, for instance, or transfers, social transfers, cash transfers, or transfers in kind that can be targeted to the people in need. So if you have access to those instruments, there's no particular role for the VAT to play, because the VAT will always be more blunt to achieve these objectives. So VAT is more an instrument for mobilizing revenue in order to pay for public spending that can be redistributive spending. So that's the sort of the starting point from textbooks. This conclusion might change, however, once we would be able to design and enforce a personalized VAT that can take into account these individual characteristics of people. And with digitalization, we see increasingly these discussions upcoming. Now, second, I'm going to discuss issues about, well, how does the VAT impact equity in reality? So what is sort of the story about regressivity of the VAT? I'm going to make 3 points there. First is, if you assess the distributional impact of the VAT with respect to consumption or total expenditures or lifetime income, it appears that the VAT is not regressive, as is often claimed. It's only regressive if you assess that to annual income, which is sort of an arbitrary period of time. So most people tend to say, well, it's better to assess it relative to consumption because people smooth consumption over their life cycle. And if you do that, the VAT appears to be often either proportional or sometimes progressive. So the second point here is about the use of the exemptions and reduced rates in order to make the VAT more progressive. And as I said in the beginning, the VAT is a rather blunt instrument, which is illustrated in the pictures here on the right, which is the kind of analysis that you often see with respect to VAT and equity, which shows the impact of VAT exemptions and reduced rates on the tax burden relative to consumption for the 10 different deciles, from poor to rich. And you see that it is in Ghana and Sri Lanka in this picture slightly progressive, because the poor benefit slightly more than the rich, which you see in the various bars. But at the same time, you also see in the line the dollar amounts of the relief for the various deciles, and that is clearly steeply increasing towards the end. So in dollar terms, much of the benefit actually flows to the highest decile of the income distribution, which is basically, suppose you would be able to use these funds for other instruments that redistribute more to the poor, then you could achieve much better outcomes in terms of redistribution than you would achieve through VAT exemptions and reduced rates. The third point I'm going to make about regressivity of the VAT is on VAT incidence. Exemptions and reduced rates, also in these pictures, assume that the prices will fall so that the consumers will benefit. But is this really the case if you reduce specific reduced rates on specific items or specific exemptions, that prices will always fall? There's recently a lively literature on this about VAT pass-through, and some studies, for instance, our recent study we did, found that if you do a reclassification of the VAT from a standard rate to a reduced rate, the pass-through is actually very small. It was only 16%, which is of course very important for the distributional impact of these measures. There are many other dimensions of that equity, which I'm not going to discuss, issues around the informal sector, intergenerational equity, gender equity, but I won't have time to discuss now. Maybe this will come back in the discussion later on. I move to VAT and efficiency. So is there reason to use VAT exemptions and reduced rates to pursue efficiency? And again, let's go back to the textbook, which tells us that, well, there may be reasons for differentiation of consumption taxes to mitigate, first of all, labor market distortions. Second, there can be merit good arguments, or third, there can be a corrective role for tax in light of externalities, for instance. Now, if we look at the first one, the labor market distortions, there's a bit of empirical literature trying to identify items that might be candidates for lower taxation or higher taxation to mitigate labor market distortions, but there's not much guidance from that in terms of clear patterns that of goods that should be reduced or taxed higher. The only exception maybe is childcare, where we may impose lower taxes, but it does not necessarily have to be through the VAT. That can also be organized through other instruments. Merit good arguments also is something that governments typically pursue through other instruments, basically subsidies. Think of education, for instance, which is highly subsidized. So not necessarily through the VAT, through exemptions of the VAT. And also the corrective role of tax with externalities or health impacts, that's typically better addressed to specific excises rather than through the VAT. When it comes to efficiency of the VAT, it's actually the case that reduced rates and exemptions do create distortions, not only in consumption, but actually that exemptions also produce multiple production distortions. Think of the tax cascading effects of exemptions. It may have implications for firms with respect to vertical integration. It may have implications for outsourcing. So all types of distortions that exemptions and reduced rates can create. There may be reason for maybe exemptions of certain businesses. Think of small businesses, but that does not have to do so much with allocative distortion, but more with the compliance and administrative burden. When it comes to larger companies, for instance, industrial policies, VAT is typically an ill-suited instrument to pursue those policies. And this is also reflected in a recent study that looked at the growth impact of the design of the VAT. And it found that if you do a policy of base broadening, so getting rid of exemptions and reduced rates and lowering the VAT rate, this is actually good for economic growth. So the third dimension is then VAT administration, the enforcement. So is there reason to use exemptions or reduced rate for those purposes? Again, textbook tells us, well, the VAT, the attraction of the VAT is its self-enforcing mechanism. So the incentives for voluntary compliance, and which makes it superior to one state's resale sales tax. If you start introducing exemptions and reduced rates, you typically start to complicate enforcement. First of all, you have issues around the classification, which could fall under the reduced rates versus the standard rates, with all types of litigation and discussions. So there's also respect to reduced rates. This may increase the likelihood of firms receiving refunds, and refunds is typically an issue where problems do arise. So for instance, with VAT fraud, with missing traders, with exemptions. Exemptions typically imply a break in the VAT chain, so it takes away the incentives for voluntary registration, voluntary compliance. So exemption and reduced rate typically complicates administration rather than help it. Although for some items, applying the VAT is very hard. Think of financial service, margin-based financial services, or life insurance. So in these cases, there may be a justification for exemptions. But typically using exemptions to solve administrative problems, for instance, in VAT refunds, is not a good idea. So these were the three arguments. Let's now discuss the revenue implications of reduced rates and exemptions. So for exemptions, the impact is actually quite subtle, because you not only do not charge, the exempt supplier does not charge VAT, but it also cannot claim input VAT. So this has the opposite impact. So the effects for exemptions are quite subtle, but for reduced rates and zero rating, it's quite obvious. And you can assess that through tax expenditure analysis. That compares the revenue compared to, let's say, an ideal VAT with a broad base and a single rate. And many countries do that on a systematic basis, and also this is something that the IMF supports through its tax expenditure assessment program. And this is a picture here showing the results for Latin American countries published by SIAT, showing that for these countries, the average revenue forgone is over 2% of GDP. And this even ignores the impact that exemption reduced rates have on efficiency and compliance. So huge revenue potential if you would resolve this. So to summarize, basically, there are very good arguments for reform of exemptions and reduced rates in many countries for multiple reasons. First, to reduce inequality, because mobilizing more revenue allows governments for higher public spending, and including social spending. It's important to alleviate distortions, including production distortions from exemptions, and to simplify the collection. And so it's very important in light of revenue mobilization, and it's important for governments to pursue the whole spectrum of tax policies, including income taxes, property taxes. But given the level of the ambition to, in light of spending, for instance, to achieve the social development goals, sustainable development goals, it's hard to see to achieve this without the VAT. And the picture on the right shows the so-called C efficiency, which is the revenue as a ratio of the potential revenue given the current standard VAT rates, which shows for the world it's about 50%. So huge potential, but for some regions it's even lower. For instance, sub-Saharan Africa, it's less than 40%. So huge potential to increase revenue through VAT. Then comes the hard question. Why is reform so hard? Because everything I've said is probably not new. It's also no surprise to many, but why have we seen so little progress in many countries? And I think a lot of the discussion in the panel might also be about the political economy of VAT reform. Here on this slide, there's a number of issues mentioned related to exactly the political economy. So why do special interests sometimes prevail over the general public interest? But also a lot has to do with information and misperceptions, lack of information, lack of assessment of the impact. And this is also something where hopefully the IMF can play a role going forward in assessing and informing policymakers about impacts of reforms. But with that, I leave it back to you, Mick, to start the discussion.
Many thanks, Ruud. Oh, you covered a terrific amount of sometimes difficult material, very, very concisely. Thanks very much for that. And I can see we're already getting some reactions in the Q&A, so let me encourage people to carry on doing that. And we'll come around to, I'll invite speakers to address the questions maybe a little bit later. But what I wanted to do now was turn to our four panelists we're delighted to have with us, who bring very different, I think, perspectives to the set of issues that we're talking about today. So perhaps I can just start by introducing our panelists, and in more or less random order, let me start with Sebastian James, you see there, who is a senior economist with a specialism in tax policy in the part of the global tax team in the World Bank. We work very closely with Sebastian on a range of tax issues for many years, of great depth of country experience and analytical background too. Then we'll turn later to Rita de la Feria, who is Professor of Tax Law at the University of Leeds in the UK. I'm sorry, but I don't know if you follow soccer, but Leeds did have a terrible weekend, but we don't need to go into that. Rita's a well-known tax lawyer, expert in many areas of taxation, with certainly strengths in economics too, particular reputation, I think it's fair to say, on VAT issues. So welcome, Rita. Then I'll be turning to Moses Kagwa, who's Director of the Economic Affairs Department, Ministry of Finance in Uganda, previously Head of Tax Policy, and a long and distinguished career in tax issues there. And then we'll have Lasha Kutshishvili, if I say that reasonably correctly, who's Vice Minister of Finance in Georgia, has been for about 6 years or so, previously was Head of the Georgia Revenue Service. So we have a great depth of experience to draw on in this discussion. So let me perhaps begin the discussion. And I'll turn maybe first to Sebastian. And perhaps I'm going to ask our panelists to kind of keep their answers to 4 or 5 minutes, if that's possible. So we may have time for 2 rounds. So maybe Sebastian, you and I both know that we often hear from people the importance of reduced rates, exemptions, so on, in making sure that the VAT has kind of acceptable distributional properties, that it contributes to progressivity. We had a sort of rather different story from Ruud in terms of how best to pursue these objectives and the suitability or not of the VAT in the context. So maybe you could say a bit about what your perspective is on that issue, how you see the link between the VAT and the pursuit of equity objectives while we're also trying to raise revenue. Do you think there are better alternatives than playing around with reduced rates and exemptions in achieving equity objectives? And so broadly, your take, perhaps, please, Sebastian, on that set of issues.
Thank you, Mick. Indeed, so I would like to share some of the experience of the World Bank in providing technical assistance to countries on the VAT issue and what we have learned from that. Especially some of us in the World Bank are especially focused on poverty and especially focused on inequality, and it's one of the fact that the VAT has such a strong impact on how much the poor can spend on basic necessities is critical to understand the impact of tax system on poverty and inequality. And our studies are quite, Ruud already covered it, and it's quite mirrors that. So I'll go through some of these the findings that we've come to on these studies. The first is that on the first pass, the VAT, being a tax on consumption, tends to have a stronger impact on the poor because poor tend to consume more of almost all their income. So that part will imply that the VAT is regressive because the poor spend a lot of their money on their consumption while the rich may end up saving some of it. So that's the first pass, but that's just the first pass. And so that may give the impression that if the poor spend most of their consumption, especially on essentials, can we identify some of these essentials and kind of reduce the tax rates on these essentials? So that's I mean, I guess I can understand that would be the initial reaction. But evidence is mixed on that. The point here is that as you know, it's that VAT is not a straightforward tax, especially considering that it's taxed at every stage and requires input tax credits. So it's a chain-based tax, makes it complicated. The more you introduce exemptions and special rates, it creates a lot of complexity in administration, and this creates problems with evasion and lots of avoidance problems. And that actually ends up making the VAT more inefficient. And the question is the VAT on its own, if you want to have equity in the VAT on its own, then you need essentially the idea being that every tax should be equitable on its own. But the VAT is a part of an ecosystem of taxes. And so the question is, should the VAT collect as much taxes while the spending provide some of the relief that the VAT will be creating? And, and if you look at both the tax and the spending side, you find that the spending instruments have a very strong impact on reducing poverty than just the tax instruments. So we find that many countries use cash transfers as a very strong tool to take to kind of mitigate some of these influences. And as a combination, turns out to be a very powerful instrument rather than just using the tax on its own. And because the net result is of having a complicated VAT is you end up collecting much less, and that means much less to distribute to the poor. So this is what we see in the literature. For example, if you actually look at the impact of VAT on the regressivity of VAT, like looking at the deciles that Ruud mentioned, you don't have much effect. There is definitely an effect, a higher inequality effect on the poor, but that's really small amounts, and that could be because of the exemptions. It's true. Now, there's no doubt that exemptions do help the poor, but they also help the rich. And in that process, you end up lowering the tax base, the VAT base. You can collect much less than you would be collecting. So now and that's the second pass of that. But then when you look at it much more closely, and then you look at where people are buying their essentials, you find that when you find the poor and especially rural areas, they tend to buy their essentials from a village store, likely to be not registered for VAT because they're below the VAT threshold, or they may even be in the informal sector, that is, they're not registered even though they should be registered. And this is what we find in many, especially poor countries. So poor are sourcing their consumption from places that are not VAT registered, which means the incidence of the VAT is actually much less on the poor on these consumption of these essentials. So putting all of these things together, it's not that exemptions are actually helping. In fact, they may be hurting because you may actually reduce the size of your tax pie, which means less to redistribute to the poor. And we can go on forever. I could give examples, but I'll stop there for now. Thank you, Mick.
No, thanks, Sebastian. Very interesting. I guess we can maybe talk later about your experience as to whether countries really have all these, do have the kind of cash transfers we talk about as being the way to address some of these equity issues. But let's maybe continue the theme a little bit with Rita, and really get also your take, Rita, on how you see the links between VAT and objectives one may have in relation to inequality and poverty, and how you see the kind of consensus among people who do research in this area, and maybe whether you have thoughts on whether there are ways we can implement or redesign the VAT in ways that have good impact on progressivity, but maybe avoid some of the issues that that we often see arising with the VAT as it's done now. I wonder if you have any thoughts on that, Rita.
Okay, thanks, Mick. And I start by saying that I have zero knowledge of football. So so I can't comment on how Leeds perform over the weekend. So I'll restrict myself to VAT issues, if that's okay. And I'll start by saying that there is a general academic consensus that VAT is not a good vehicle to achieve equity. There is some dissenting voices, but there is a general consensus along the lines that Sebastian just said now and that Ruud put forward on the presentation, that VAT is perceived as extremely regressive, but is not as regressive as it might appear, that prices often don't come down. Then even if they do come down, they benefit the richest a lot more than they benefit the poor, and can create enormous amount of distortions. So in addition to what they have already said, I'll just add from a legal perspective that the level of litigation that arises from reduced rates of VAT and exemptions is absolutely enormous. And the cases concerning fraud and avoidance, for example, are heavily concentrated on the application of reduced rates and exemptions. So just to give you a small example, that in the European Court, which is kind of the Supreme Court for the European Union, of all the cases on avoidance that we had over the last 15 to 20 years, only two of them, do not concern reduced rates and exemptions. So this is an absolutely surreal statistic, right? So the levels of litigation, the levels of fraud and avoidance are extremely high, in addition to all the problems that Ruud and Sebastian already mentioned. So then the solution that we have been advising people, and academics have been advising people, and the IMF and other organizations have, is to say the modern VAT is the way forward. So do welfare transfers instead of applying reduced rates or exemptions. And the truth is that there is political economy obstacles. I guess we will have the opportunity to discuss those as well. But there is also constraints from a practical perspective to applying welfare transfers, not least because of a lot of developing countries have targeting problems. So difficulties identifying the people that need the most. So in conjunction with Arthur Swistak, who is a member of FAD, the FAD department of the IMF, we have been trying to develop a way forward that kind of goes beyond what we have, what we know in terms of traditional VAT, modern VAT, and proposes a different approach to things. And it picks up on the idea that VAT can become progressive, and there has been proposals over the years by many academics saying maybe we should take into account kind of a personalized type VAT, or adapt the base, or have kind of a targeted rates for different groups. But instead of going in the way of modifying the base of the VAT, what we propose in the paper, in essence, is that the legal design remains the same, but you do real-time transfer of welfare as people are purchasing the products. So if you are a low-income household, you would be identified as a low-income household, and then when you're doing your shopping, the system returns the VAT to you in real time. And how would we do this? We would do this by using real-time technology, much of which is already being used by many countries around the world, but as an anti-fraud software mechanism. And what we're proposing is, in essence, to modify that anti-fraud software and to add a progressivity element to the VAT system and do real-time transfers. Now, from our perspective, this would have the advantage, obviously, of collecting a lot more revenue, at the same time as decreasing inequality, which is really kind of the Goldilocks of every tax policy instrument. But it also overcomes the modern VAT problems, not least the kind of the cash flow impact that any welfare transfer system would have, this would eliminate it by giving the money immediately back to the consumer. At the same time that it would also deal with some cognitive biases, like, for example, loss aversion. And I guess this is the broad picture of the progressive VAT. I could obviously talk a lot more about it, but I'll pass it on to you, Mick.
Thanks very much, Rita. It's a great statistic on the legal cases. I'll make use of that one. And I think your thought on the your work with Arta maybe begins to answer one of the questions we see in the Q&A. I think from Zoran Gligorov about how to make a uniform rate VAT progressive. Maybe that's getting somewhere towards answering that. But perhaps then let me turn now to Moses and try and get some lessons from experience in Uganda, where my understanding is that Uganda has quite a long list of exemptions of different kinds, or the various types that Ruud described. Maybe you could give us a little idea, Moses, on the rationale for those exemptions, how persuasive they are, and how they impact the Uganda revenue authorities' work in relation to implementing the VAT. Thanks, Moses.
Thank you so much, and good morning and good afternoon to all of you. Yes, since prior to 2014, 2015, we had a very long list of exemptions, and we had exemptions on water, we had exemptions on salt, we had exemptions on computers, and all these were thought to be meritorious. But that time, our argument to everybody was that these are intermediate goods in a way. Some of them salt, though it's a final consumption good for some people, but for industry, it's an input. And you create distortions when they are trying to claim their input VAT in that. And we also told them that, for example, education is generally exempt. They're not and they're not the only ones that use computers. Industries use computers, factories use computers, everybody, people in the service sector. So we had to convince them that it's important that we don't have these exemptions which distort the VAT system, so that there is a break within it. And that time, everybody agreed with us and we moved. But subsequently, there have been preprints of exemptions, and some of them came from emotions. We started with things like life jackets when people started dying on the lakes, and they said that people could not afford life jackets. They were so expensive because of the VAT at 18%. Therefore, since they were being imported, we should remove the VAT, which was the only tax on that. And then we removed them, and then there were other things like, CCTV cameras. When people, when terrorists started hitting Kampala, they said, well, one of the problems is that people cannot afford CCTV cameras because of the VAT. And then, yes, those emotions took over, and that came in. So it started like that. And then lobbyists came in, all sorts of lobbyists, and especially because of the VAT refund problem we had on goods that are coming from out of the country, like agricultural inputs and machinery. Then they said, yes, this one should be exempt because we take so long to get a refund from URA. We borrow a lot of money to pay VAT, and instead of refunding immediately, we don't get this refund. It takes almost 1 year before we are refunded. So there was that move to say, why are we suffering? After all, this is an input which ultimately doesn't attract tax. So that came in, and it continued with very many industries claiming that yes, they want to have their inputs free of tax so that they don't have these distortions in tax administration. So what has this led to in terms of tax administration? One, we have noticed that, for example, in the year 2018, 2019, exemptions amounted to 1.2 trillion Uganda shillings. That is almost $350 million, and it's a lot of money. And that is an equivalent of 1% of GDP. So that's an amount of money that we lost, considering that our tax to GDP is 13%. So we lost a whole 1 percentage point on exemptions. That's the revenue side. The others is on the tax administrative side. We've had a lot of problems in the definition on what is exempt and what is not exempt. For example, if we look at machinery for agriculture, there were all these arguments as what is machinery for agriculture. Someone will bring a big lorry truck and say this is machinery and it's equipment for agriculture. I want it exempt. So there were a lot of discussions and a lot of arguments with URA and the taxpayers on what was exempt and what was not exempt. So URA took a lot of time in terms of trying to resolve some of these things. So what we have also done at the tax policy side was to try and define what we meant in the law by agricultural equipment and machinery. And that led to a very long list of exemptions, because every time you're putting in some other item, it is coming in. Sprinklers are now there, tractors are there, tractor heads, and so on and so forth. So every year they're bringing something and say you've not put it in there. And it causes a lot of difficulties, both at the administration and the policy side. So what we are doing now, after designing the domestic revenue mobilization strategy, we are moving to try and claw back on some of these exemptions. So this year we have identified some that we are going to remove from our books. Hopefully Parliament would support us, because some of them are not really helpful at all. Some of them have been given to industry, and industry has realized that they actually don't need them. One of the classic examples was an exemption on clinker, cement clinker, which is an input in the manufacture of cement. Now these people get an exemption, and they realize that they cannot get an input credit on this, yet they have incurred some expenses in the transportation, which has a VAT element. They have incurred VAT on other services that are related to clinker, but they cannot claim it. So now they have also realized that it doesn't help them, and they have come to us and said, yes, let's remove them. So some of those industry-specific exemptions for intermediate products, we are going to remove them. Thank you so much.
Many thanks, Moses. That's a very enlightening experience. And maybe we can pursue this link that you raised between administration and pressures for various kind of reliefs by turning to Lasha, if I may. So my understanding is there's been a fair list of exemptions and zero ratings for business inputs in Georgia. But then as administration improves, the refund system becomes more robust. Are you finding that the case for those kind of special reliefs is becoming weaker, and that you're going to be able to persuade business that they're kind of unnecessary? And or more generally, what other constraints do you see on addressing, if you think it's appropriate, some of those exemptions and zero ratings you currently have?
Thank you, Michael. Thank you. Many thanks to International Monetary Fund for arranging this webinar. Generally, pressure to the governments from the business community on tax incentives increase, while tax administration is characterized with significant deficiencies. Value-added tax is quite sensitive in this regard, because the perfect VAT administration includes not only tax collection but also the proper tax refunds. VAT refunds are very important in relation to VAT credits, as tax credits are taxpayers' assets, and restricted access to them is associated with great dissatisfaction from the part of the taxpayers. However, proper organization of VAT refunds process requires a significant improvement in tax control also, in order to avoid tax fraud cases. In addition, the accumulation of VAT stocks over the years can become a fiscal risk for the country as well. Over the year, VAT refund system represented one of the weakest point of Georgian tax administration. Once VAT refunds were claimed, claims were approved, the amounts were credited to taxpayers' account. It was allowed to offset VAT credits against other tax liabilities, but remaining amounts were added to the stock of credits. Improper functioning of the VAT refund system has caused the increase of the stock of credit balance, which made up to 5% of the GDP by 2017. Fundamental reforming of VAT refund system has been placed on agenda, and therefore the relevant project has been planned and implemented in 2018 and 2019. The outcome of the project was the implementation of fully automatic refund system using the tax risk-based approach. The project framework covered establishment of VAT declarations processing models, initiation of new processes in the audit and the compliance departments, also elaboration of methodology, establishment of case management software systems and other activities. As a result of the establishing the automatic VAT refund system, annual VAT refund increased 4 times in Georgia last year, and the stock of credit balance has been significantly decreased. Now it's less than 1.5% in relation to GDP. Based on the 2 years experience, more than 90% of submitted declarations are automatically approved for refund, and only 2-3% of the cases are transferred for auditing. VAT refund and access to cash flow by the business sector is very important, especially during the pandemic and economic crisis. Refunded more than 1 billion Georgian lari was significant oxygen for the business last year. And we are very glad to announce that the VAT refund system reform was named one of the successful reform of past year from the business community. Also, we can say that the pressure to the incentives from the business side decrease.
Thank you very much. That's terrific. Maybe we can, having had a first round giving a lot of interesting perspectives, maybe we can have a quick fire second round. If I can ask respondents to keep to a maximum of kind of 3 minutes, and perhaps going around the table once more. I mean, Sebastian, maybe you could tell us a bit about how you see countries going about VAT reform these days. I mean, I know there's special times, but do you see countries moving towards or try to move towards something like what Ruud described as the modern VAT? How do you see the balance countries are trying to strike between kind of closing compliance, what we called in the first session, the compliance gap and the policy gap? How do you see reform actually playing out at the moment? Recognize, as you say, that these are kind of unusual times, right?
Thank you, Mick. We do see, unfortunately, the biggest problem that we face, like what Moses was mentioning, is a lack of understanding of what is good policy. And I think we need to do a much better job, as Rita mentioned, of communicating what the impact of all these exemptions are to the public. And I think we do a very poor job at this. And I mean, it's a classic example where people, initially they say, they're always lobbying for VAT exemptions, and they don't realize VAT exemption implies they will not be able to get input tax credit. And the amount of, the lack of knowledge on the VAT and how it works is really remarkable. And because of this, we find the second and third order effects, third best and fourth best models being used. And like what, so we have one thing we see is, like we'd say, and even what Moses mentioned, we have an exemption cascade of exemptions. Basically, once you exempt one industry, every other industry wants an exemption. And that creates so many holes in your VAT that you have to end up raising the VAT rate to make up for all these exemptions. So that's the first part. But even then, trying to introduce equity within the VAT rather than trying to introduce equity within the broader tax ecosystem that is using personal income tax and transfers for the redistribution and using VAT to generate revenues, that again is all something that has to be conveyed to the public, but it's not being done effectively. And so we see that in the VAT, countries are having, I mean, this is recent reform. As recently as June 2019, Bangladesh, instead of going for a single rate VAT, has gone for 5 rates VAT. And essentially, which means they try to identify every item that would be consumed by the poor. And it could mean things like, skimmed milk will have a different rate from full cream milk. It can be as complicated as that. India has also in 2017 adopted 5 rates of VAT, starting from 0% to all the way to 28%. So you find that countries are, though it is being told to them that this is not the best way to run your VAT, but they are unable to sell it to the public. As recently as in 2018, Colombia tried to introduce what we call a modern VAT, a broad-based VAT, lowering the rate, transferring cash to the public. It did not work. In fact, a lot of the middle class felt they were out of the reform, and so they didn't allow the reform to go through. So what we think would be the best case scenario was actually implemented very recently in Colombia, but did not pass. So I think that's where we, as policymakers and the government, we need to do a much better job at getting the public to understand that why this is important. One thing that what we found in our is that if you do a universal cash transfer, that is, if the middle class feels that they are being left out, that if the poor are going to get a cash transfer, but the middle class are going to be left out, and there may be gaps in your cash transfer system, then a universal cash transfer will ensure that everybody gets some money. And maybe, and we found that at least one of my colleague Gabriela in a recent paper, Gabriela Incauste, found that if you even give a universal cash transfer to everybody under the VAT in place of exemptions, you'll actually improve, make it more equal. So one last example I want to share is a positive example where it's from Iran, where they introduced fuel subsidy reforms. But what they did was they send money in advance into the bank accounts of the public, but they had a lock on it. The lock would be opened only when the law was passed in the parliament. So public could see cash lying in their bank account with regard to the fuel subsidy reform, the benefits of the fuel subsidy reform, but they couldn't access it unless the law was passed, which created a great momentum for the law to be passed. So I'm just saying we need to find ways to move towards a modern VAT through a better education and better methods of trying to sell this to the public. Thank you.
Yeah, thanks. Thanks, Sebastian. Some very telling examples, and I think the Colombia example came up in the Q&A, so I think that was a very helpful point. Maybe Rita, so you get the easy question. So how do you go about these great reforms? Kind of building a bit on Sebastian's remarks in 3 minutes.
Okay, so I would say that basically the political economy obstacles are the biggest ones, right? So there is targeting issues, as I mentioned, but anyone that has worked on VAT policy and has had contact with the general public about these issues knows that the political economy are the biggest obstacles. And as Sebastian just mentioned, Moses and Lasha also highlighted, is a lot about information, right? About transmitting the knowledge. But I am always reminded of a sentence that I read a couple of years ago on a paper by you, Mick, and by Ruud, where it says that it would be comforting to think that if we just gave the information, the public would make the right choices. And that sentence stuck with me because that was my experience as well. Even if you explain to people, people tend to disbelieve. So in a project that I just finalized with Michael Walpole, who is a professor at the University of New South Wales in Australia, we basically tried to look at what is happening. So why do people, the general public don't believe you? What is going on beyond just the information issue? And what we basically try to understand is the various steps, and we boil it down to two issues. One is about comprehension. But the other is also about trust. And the public in general doesn't trust the two-step approach. I'm going to take something from you now, but I'm going to give something to you afterwards. So this kind of two-step policy approach, it doesn't really ring true to the public. They are afraid that the second step will never happen. So we basically try to, there's also a key issue about interest groups, and Ruud mentioned in his presentation about how the interest groups have the interest of the few kind of are more concentrated than the diffuse ones of the general public, and therefore they are stronger motivations to speak out. But there's also an issue about how people transmit that special interest. So what we see is that special interest groups instrumentalize fairness issues often to come across to, in essence, put forward their own tax breaks. So it really isn't that you want the tax break is because this is good for the poor, or it isn't really that you want the tax break is it's good for employment or good for gender equality, etc., etc. So when we try to pass on the knowledge, we also have to take into account how that knowledge is transmitted. So you can't talk about GDP and economic distortions and efficiency issues because the public just doesn't click with that. They don't really get what that means. So the narrative, what we put forward in the paper is a counter narrative. So what we need in terms of political economy is to have a counter narrative of fairness. Forget about the efficiency. The issue is we are taxing the consumption of the rich to give public services to the poor. And that kind of narrative of fairness is much more likely to succeed than the narrative that concentrates on things that the public in general doesn't understand. Finally, we also put forward also this idea of the progressive VAT as a way to overcome the two-step policy, right? So you're not taking away and giving later, you're actually merging those two moments in time, and therefore thus boosting the trust and the confidence in the system. Again, I mean, the paper just highlights all the political economy constraints. It highlights the path, what we think would work in terms of putting it forward. It has been published last month, so anyone that is interested, I'm very happy to pass the paper along. Thank you.
Many things, Ruud. No, that's fascinating. It's a very sort of powerful set of arguments. I mean, it does seem to me that, and gets into some quite, in a way, heterodox issues, right? You get into issues of earmarking, you get into issues of, well, maybe the best way to reform isn't to have kind of a lot of public discussion, you know, a lot of successful reforms that people just do it. But anyway, we can talk more about that. But I think to this point about communication, Sebastian raised, and I mean, I think economists in particular do a terrible job of explaining, particularly incidents. I think, you know, one of the things that runs through, I think a lot of the things today is we always assume that the VAT gets fully passed through. It's not obvious that's true at all. And that does have some quite important, but anyway, I shouldn't go on about my thoughts, but rather let me turn again to Moses and maybe perhaps ask, I mean, my understanding is that a few years back, there was quite a lot of progress made in Uganda in scaling back some exemptions, but they kind of reappeared, or to some extent they came back. Could you tell us a little bit about your experience on that and lessons you might draw?
Yep. Thank you. Yes, as I mentioned earlier, in 2014, 2015, we proposed removal of a number of exemptions. And that time we had whole government support, both our cabinet and our parliament. And though there was some resistance from industry, some resistance from civil society organizations, I think because the message that we carried along that time was very, very clear, we succeeded in removing a lot of the exemptions. However, as I said, then came in certain events that rolled us back. And some of those events were the terrorist attacks in Uganda. And then there was this move. Cabinet decided that we should have CCTV cameras, and people said, without really having done research, that one of the impediments to getting them was the VAT. People died on the lakes, and they didn't have life jackets. And one of the issues that was mooted was that they were expensive because there was VAT imposed on them. So people started, that's when this whole thing started. Whenever somebody thought that there was a meritorious a good or product, that then that had to be exempted. So that's how it started. The interest groups started coming in and making proposals. And then they would also, then they started going to Parliament and lobbying Parliament that this was a good thing for industry, this was a good thing for the country to exempt a number of things, to exempt agriculture machinery and equipment, to exempt services that are related to agriculture, to exempt all sorts of things. Solar energy, because people didn't have access to this. So anything where people didn't have access to was attributed to tax. The tax was an impediment. And this move became so strong that whenever we'd go to Parliament and try to argue against it, would never succeed. So that's how we lost all this battle. But now, of course, we are thinking about regrouping and saying, yes, what communication strategy are we going to use to try and have people appreciate that these exemptions are actually not useful. They are very distortive. They are leading to non-compliance. They are leading to loss of revenue. So we are looking at different ways which we think that we are going to use. One of the ways is that, yes, we are moving with civil society organizations in trying to sell this whole notion that VAT should be essentially for revenue mobilization and nothing else. And we are also trying to sell it slowly to parliamentarians through seminars before we propose any changes, so that they will understand better how the VAT operates. And we think this approach may give us some a mileage. Thank you so much.
Thanks a lot, Moses. And so let's wind up this round by maybe asking you a little bit about the work. I understand you're beginning on assessing tax expenditures under the VAT in Georgia. Can you say a little bit about that work and where you think it might lead you in terms of reformulating policy on zero rating and exemptions?
Yes, according to the budget law 2021, it was for the first time when the budget included total amount of tax expenditures in Georgia, and this is significant for several reasons. But one of them is evaluation of effectiveness of tax reliefs. Generally, Georgia's experience regarding the existing challenges doesn't differ much from the other countries, especially for the from the challenges of developing countries due to the pandemic. Reduced tax revenues, increased government debt, and high fiscal deficits. These are the indicators that will be the main concerns for the developing countries in the year following the defeat of the pandemic. Due to the reduced budget revenues, and it's probably hard to imagine that without large-scale reform, the amount of public debt and the level of the budget deficit will remain the pre-crisis level over several years, 4 or 5 years. Frequently, tax relief is not considered by the part of the society as a tax expenditure, and it's deemed as a certain benefit for the specific group of the society. In fact, tax expenditure shall be considered as an indirect method of budget financing. And therefore, transparent budget shall cover detailed information concerning the financing of specific directions as well as indirect financing through the tax reliefs. When the budget doesn't include the fiscal part of the reliefs, it's difficult to consider the effectiveness of the tax expenditures and whether it reached the intended goals. The history of tax relief in Georgia covers decades, and it's rarely abolished in practice. This process is always subject to political speculations and the way of incorrect interpretation of solving with the different kind of the problems. Therefore, the first step of evaluating of effectiveness of is transparent inclusion of financial figures in the budget. The existing practice show that the process simplified right decision-making process, and there are several examples of it, and it's in Georgia also. The existing VAT exemptions now are being analyzed, as well as the effectiveness of each of them is being evaluated. Precisely what is the cost of each of them and how much it achieves the purpose for which it was introduced. And the next step will be abolish unnecessary VAT benefits and broadening VAT base. Based on our practice, it's clear that in most cases, tax reliefs appear to be much more expensive for the society as it seems at the first sight. And in most cases, it cannot achieve the set goals. Reliefs doesn't satisfy the modern standard of transparency. Also, it's not the most effective way to incentivize the specific directions and significantly deteriorates the tax administration, which in turn is related to the great expenses as well.
Let me then just make a few remarks. I hope not too contentious by way of concluding. I think one is just to remind ourselves again that we have to think of the VAT as part of the broader tax and spending system. When we talk about all these equity efficiency issues, we really need to place things in this wider context. That's why I thought the question, for example, about comparing income tax and VAT was helpful, or more, since I think we typically say everybody has to have, we typically recommend both. I think we'd always recommend that countries have both, but how we align the two, I think is an important question. I thought that was a helpful discussion. The point about distributional analysis, trying to take account of the full system, tax and spending, but the difficulty of doing so, and I think that's clear in an area where there's a lot more work to be done. I think there was some consensus that really the VAT is there to raise revenue. That's why we have the VAT. Issues about the how progressive or regressive the VAT is, thinking about issues of, for example, lifetime basis, how that affects the perception, role of what we need to know a little bit more about, the pass-through, the extent to which reduced rates are actually passed through to lower consumer prices, the extent to which instead they benefit producers. And I think we saw too that Well, yeah, the VAT thresholds. Threshold issue is important. I suspect we'll talk about that more next week, the next webinar, when we focus more on administrative issues. We saw some of the well-known disadvantages of VAT exemptions, distortions potentially caused. We saw powerful examples from the EU and Uganda on how on the problems that can arise from excessive use of exemptions, so it may be unavoidable in some cases. So I think, we've heard a lot of people making the case for broad-based, minimal use of exemption forms of VAT. And I think not many people that I heard, at least, arguing the opposite. We I think made some progress. Very interesting points were made, I think, on how we move to make this, to move from what we think of as being good reforms, how to make them actually happen. I think we're perhaps learning more about that, the key of communication, although it's important to go beyond communication and actually to kind of build people's trust in the kind of ways that Rita was particularly describing. And I think we also, maybe we could have said a little bit more about where the technology is going, and a whole range of aspects of the VAT, but certainly in relation to achieving equity objectives. We heard about how one can move towards more effective use of transfer systems. Even in the crisis, we've learned more about how to use cash transfer and other systems, but we heard too about possibilities looking forward of the kind of real-time reimbursement system described by Rita and Arthur in their paper. So I think that brings us to an end of this session. So a reminder that we have the fourth session is to come, fourth webinar is to come, which will be focusing more on the administration issues. So with that, on March 16th, I'm told. With that, let me give particular thanks to Ruud, for our presenter, to Sebastian, Rita, Lashi, and Moses for being such excellent panelists, and all of you for your lively and helpful questions. So it's still time to complete the poll if you haven't done it, but with that, thanks to everybody and goodbye.